We're just hearing there from Kat about some of the dynamics around the Asia Tech story, Paul, but we're going into a really busy week for Asia Tech, aren't we, with Samsung earnings, SK Hynix, ADR at the end of the week. How does sentiment feel this Monday?
Yeah, good morning, Anna. So 3-2 is the score on everybody's lips this morning, but for South Korean equities, at least it's more 2-all and going into extra time. A couple of positive points for the bulls out there. One, we had decent earnings and read across from Taiwan's Hon Hai, the technology company, still, kind of pushing forward those very large increases in sales. And two, we had some local reports that Samsung is going to be raising its prices for its chips again in the third quarter. So those are a couple of things that have been on the positive side. Samsung stock up a little bit today, but on the negative side, as Kat was talking about, this talk of a possible tax on excess earnings for South Korean chip makers, it doesn't have to be a bad thing, because if they're reinvesting that money in infrastructure and so on to support the businesses, it could be good. But I think investors hear tax and think, uh-oh. And also, there's been more and more consternation about these leveraged ETFs on the single stocks in South Korea, people calling the Kospi something like a casino, which, if you've been covering it day to day, it certainly does feel a little bit that way sometimes. So 2-all, what's the extra time? The tiebreaker is Samsung's earnings, which we get tomorrow. Very lofty expectations, but if it can match them or exceed them, then maybe the market takes heart from that.
OK, let's put another score up. $165 yen. We've just had Kamakshaya Trivedi on the show from Goldman Sachs. That's their target. He thinks they get there relatively slowly, Paul. Is that what you're hearing elsewhere? Are we still going to see upward drift in dollar yen? And what is the pace?
Yeah, it's a good question, isn't it? I think what the MOF and the Japanese authorities have managed to do through their rhetoric and their threats of intervention is slow the pace of declines, at least for the yen, although it continues to push lower. So the Goldman Sachs call of 165 for a year from now is not very far from where we are now, but it is still pointing to that sort of bearish direction. And we have hedge fund positioning, net short positions, the biggest and the most extended since 2017. So that tells you that the market is also looking for more weakness in the yen. Goldman Sachs is recommending it as a funding currency for carry trades. So that's not so much leaning on the idea the yen will depreciate, but that because its interest rates are extremely low, you can make money by borrowing the yen and investing it in higher yielding currencies elsewhere.
Paul, on energy, we're looking at Brent at $72 a barrel. What is the level of conviction in the markets that oil remains at or below these levels?
Yes, so I think if you're bearish on the yen, if you're looking for market sentiment, much more bearish on crude oil. We had the symbolic OPEC meeting again, talking about increasing production over the weekend. We've got pressure from short-term levels because of the amount of crude that's flowing out from the Strait of Hormuz and production elsewhere as well. We've got the front end of the curve, I think, back into contango, which tells you that there's plenty around at the moment for people. And then Citigroup coming in with quite a radical call, looking for $60 by year end. So plenty of fodder for the bears there too.